Like myself, many of you are probably planning to enter the workforce after college, maybe even after this class. My presentation is, I'm here to provide you with different financial tips and tricks you can use that we feel we aren't taught in school to budget your money and save your money and know how much you are going to make your first year and your first job. So what's a good starting salary? As you're applying for all of these jobs, you're seeing, different salaries, wondering, is this a good number? The best way to figure it out is to check out the median income for your state, meaning what the majority of your state is earning and filing taxes on. So the median income is $43,993 per household in Indiana. So per household is important because that includes single people and people filing jointly, so like married couples or like head of households, etc. Yes. So you've got your salary. Now you want to know how the tax bracket works. Most of us are single, filing our taxable income here, so we're going to stick to this first column, and these are the different brackets: 10%, 20%, up to each one of these amounts. And you are taxed at each bracket after the one before until your income caps out. So to apply this is where we learn the difference between gross income and net income. Your gross income is the salary they tell you, and your net income is what you're left with after your taxes. So your first $9,700 is taxed at 10%, like we see here, and then the next tax bracket is 12% up to $39,475, so on and so forth. So up to that, and then moving on. So let's break this down. Your gross salary will say $52,000. What do you get to keep? This scenario plays out as if none of your taxes are taken out in your paychecks every 2 weeks. So this is a good estimate to know how much you really owe the government, and then you can also determine what you might get back as a refund from this. So your first $9,700 taxed at 10%, $970. So you take your gross salary minus your first tax bracket, leaves you with $42,300 in remaining taxable income. Now that's greater than that second tax bracket. So only $39,000 of it is being taxed at 12%. And then we have a remaining $2,825 taxed at the next bracket at 22%. So our net income is our salary minus our taxes. So $52,000 minus these three brackets added up equals $45,671.50. Now that we know our net income, we can move on to budgeting and saving. So let's talk about our fixed expenses we have every month. Personally, I have rent, my car insurance, utilities, and my phone bill, totaling up to $915. So you get paid every 2 weeks, 52 weeks in a year, 26 pay periods. Take your salary, divide it by 26, that's how much each one of your checks is going to be, $1,700. So multiply that by 2, because there are 2 pay periods in a month, subtract your monthly expenses, what we found here, and we're left with roughly $2,600. That goes towards any other expenses that might not be so fixed, such as groceries, pet expenses, gasoline, and then other luxury activities or money that you personally consistently spend each month. So what you're left with after these additional things you budget is your luxury money. What do you do with it? You can save it. Set up an automatic savings plan is really beneficial. There, you can do that through your bank. You can maybe set up an automatic plan an automatic payment to go into your savings account. And you should talk to your bank about different savings accounts that they provide. You can get some that are compounded annually, where you make money once a year on your fixed amount of money in your savings account, or continuously, which is compounded each month based on the money that you have at that time. So, good to know. Ways to save, like I said, the bank, also apps. Mint is a good app to use. It helps you budget and save money. Kind of the same thing I'm doing, but a little bit for you. It's like a pocket accountant. There are other good apps that can do that for you as well. Some cost a fee, so you should look into that. Another way to save money is to get a roommate or someone you can split costs and responsibilities with. Splitting your costs not only eliminates costs for you, but also that person as well. And having a roommate or someone that you live with also splits responsibilities, so maybe a little bit less of a headache if you don't have to do the dishes every night. So, limit this. Give yourself a cash budget. If you have a cash allowance, you know exactly how much you are spending on your luxury activities. So if you're just swiping your card, those things are going to build up. You might not notice that you spent an extra $200 this month that you didn't budget for. And where are you going to take that out of if you gave yourself a strict budget? So it's very important to stick with the money you spend. So any money you have left over after all of these things, you can either save it, splurge on yourself, whatever. But if you follow these tricks and tips, you will be able to successfully and effectively know how much money you're paying in taxes, what your possible refund or additional expenses to the government could be, and then also how to plan out all the extra things you do.